On the left-hand side of my screen, you're going to see a screenshot of me making an actual stock market purchase of almost $5,000. I'm buying an ETF called VTI, or the Vanguard Total Stock Market Index, and I'm doing it through Schwab. I'm going to tell you why I'm doing that and why I recommend people begin investing, and I'm going to tell you what I think you should do when you're starting investing. So my name is Kevin. I make investing videos, stock market videos, credit card videos, just anything about money. I talk about it. I love those sorts of things. So if you like them, be sure to check my other videos out. Like this video, please just give it a quick like and subscribe to the channel, and let's jump right into it. So there are a lot of people that talk a big game about investing, but they don't actually put their money where their mouth is. A lot of people make predictions about the future. They tell you why you should purchase a certain stock or do a certain investment, but they themselves don't actually put money into that investment. Don't take those people very seriously. Only pay attention to the people that have enough conviction to put their money where their mouth is. Now, unlike those people, I put real money to work, and I'm going to tell you why I bought VTI. So there are really two things I want to look out for. I want to be sure that my investments grow over time, and I also want to be sure that my investments don't go to zero. I want to have downside protection. Basically, I don't want to put all my eggs into one basket, because if something happens to that basket, well, I am going to be out of eggs, and I don't want that to happen. I want to spread out my risk because I want to be able to be certain that I'm going to have something later on, as opposed to risking it all on one bet for the potential of a big reward. There are many reasons why picking an individual stock could be an imprudent thing to do. There are all sorts of reasons a company stock can go down. The company's management could be incompetent or corrupt, like Enron. The company could have a big risk of being broken up by regulation, like Standard Oil, or potentially some of the big tech companies today. The entire market could shift, like Kodak with digital cameras. Or another firm can make a better product, like Apple did with the iPhone versus the BlackBerry, or potentially Huawei could do to some of the smartphone makers out there today. Basically, there are a million reasons why a company can go down in value, and there are people out there every single day trying to make newer, better, cheaper products and outcompete what is on the market today. It would be supremely arrogant for me to think that I could pick the winners as opposed to just sticking with something simple. And even if you're right about the future, you may be wrong about the company that you are selecting. For example, back in the day, everyone knew that airlines were going to transform the way that we did transportation. But today, very few airlines actually exist from when they first started cropping up in the 50s and 60s. Air travel got way more ubiquitous, cheaper, and better, but the companies themselves actually changed over time. And that's why it's so hard to pick the winners, because even if you're right, picking the individuals to get you there is not going to be a guarantee of success. Now, one thing I do know, and one thing that you can be certain of, is that the future will likely be a lot more prosperous than it is today. All of those companies competing for market share and making newer and better products will make your lives better. It'll make everybody richer, because we're going to have trade, we're going to have investment, we're going to have all sorts of things to increase the overall economic pie that we get to have a slice of. And don't just take my word for it. Look at the S&P 500, which is a collection of 500 different companies out there spanning every industry imaginable. Now, the S&P has gone up about 10% on average over the last century. This has been through world wars, through different technological changes, through the advent of airlines, to the advent of the personal computer, everything. It has gone up and down, but on average, it has gone about 10% per year. So getting back to it, why did I purchase VTI? Well, VTI stands for the Vanguard Total Stock Market Index. It essentially is a broad-based index, which is inclusive of the S&P 500 and a little bit more exposure to smaller and medium-sized companies as well. It comprises around 3,500 different companies, every single company that you could possibly think of. Chevron, Johnson & Johnson, Apple, Google, Amazon, all of it is in VTI. I get a little piece of the pie because as they make profits and as they grow, I'm entitled to some of that because I own a little bit of them through this index fund. These companies and their workers work hard every single day to make as much money as possible. When the companies make more money, their stock price goes up, and they may use some of that money to either buy back some of their own stock or pay dividends to the people who own pieces of their stock. And through VTI, which is an index fund, it's passive. I don't have to do anything. I just purchase it and I own a little bit of all these different companies. I get to sit back and they work for me because I'm the owner. I'm a very, very, very small owner, but an owner nonetheless. And I don't have to worry about picking the best athletes. I get to buy the entire league. This isn't some radical belief. This is a belief held by some of the best investors out there. Take Warren Buffett, for example. He's got a little bit of money. He actually instructed the trustee of his estate to invest 90% of it into a broad-based index fund like the S&P 500 upon his death for the benefit of his wife. Now think about that. Warren Buffett, the most extraordinary stock picker out there, the person who actually has benefited from being better at picking stocks than other people, is instructing the trustee of his wife's estate to invest in something simple like the S&P 500. Buffett even made a $1 million bet against a hedge fund called Protégé Partners that a simple S&P 500 index fund would outperform any number of investments that the Protégé Partners would select. He won that bet very easily. And this is why I bought VTI, because it is a broad-based, simple, low-cost index fund which is going to allow me to earn money over time simply and easily. Now, of course, I'm still going to pick a few individual stocks just to keep it interesting, but the bulk of my money is going to be in a broad-based index fund like VTI. Instead of spending all my time and energy trying to figure out what stocks are going to go up and down, I simply select VTI and forget about it. And I can go back to the things that I like, such as making videos, doing my job, and doing other things with my family. I don't care what the market does today, tomorrow, or next year. I'm gonna buy VTI as much as I can, as often as I can, over time, and forget about it, because chances are I'm gonna do well if I stick to the plan in better or worse times. You can do the exact same thing. So what do you think about that strategy? Do you think it's something that you would follow yourself, or how do you invest? Let me know in the comments below. I really, really want to know. If you like this video, be sure to give it a like and subscribe to the channel, and let me know what kind of videos you guys want to see. I always make new content and I love getting suggestions from people out there just like you. So be sure to leave it in the comments below. Now I'll see you next time. Thanks.